The last 24 hours has been relatively bloody for cryptocurrencies. Many are down single digits, some even into the double digits. Now, this is something that we alluded to on the channel just a few days ago when Bitcoin tested significant levels. And last week also looked at a looming rare signal for the fourth time, which has also played out. So I want to update you guys in today's video here on the channel with me, Jason Pizzino, covering the macro cycles and of course, the detailed analysis for Bitcoin and cryptocurrencies. Don't forget, we've got the stock markets to get through to give us a broad perspective of the traditional markets, what's going on outside of our bubble. Now, we've also got the real estate cycle as well, but more on that later in the video. Today, let's lower the barrier to entry, smash up the likes to 2,500 and subscribe if you haven't already. Few links in the video description, which I'll get to later in the videos. I've got huge announcements about our new memberships there. All right, guys, let's kick it off before we get into the cryptocurrencies and that continued bleed as we see over the course of the last 24 hours, single digits, double digits on USD pairings and BTC pairings for some of our strong cryptos, and of course the 2017 garbage or other cryptos to avoid. Very, very negative here, especially for Curve. All right, that's going to reset once we see the 24-hour market close. So let's get on with the data. Last night we saw PPI results come out lower than had anticipated. So things are looking rosy and people were wondering why this isn't spilling over into Bitcoin and cryptos. My simple answer, and it's not something that most want to hear, is it's because you just need to follow the charts for Bitcoin and crypto as opposed to relying on economic data that comes out every single month to give us a reading on the market. Personally, I've been following this for many, many years and it just doesn't make that much of a difference. And I know that is a polarizing opinion to some, but of course, use whatever data you think works for you. And I'm just sharing with you what I have found to work for myself. And hopefully you can find some clarity in not worrying about the FOMC meetings and watching live streams of people looking at it and trying to preempt what's going to happen in the market. What's going to happen is based on the macro cycle. Here is another clear example of what we were doing early this year. I've gone through it in every single video, but something a little different today when it comes to the interest rates. What we have seen is a pause after a pause after a pause, as I talked about late 2023 when the majority, as you can see here, we're looking for cuts every single month. There is January, March, May, June, July, September. Everyone thought it was going to be cuts and we were going to be under 4% in the next few months. No way was that going to happen. I did not see that happening. And essentially, the market has now reacted to some of the inflation data as it came down in the last 24 hours. You can see here with the core PPI, the CPI here and the core CPI, lots of letters there. And they think we're looking at now a cut in September. Although this could be possible, now I'm starting to shift a little bit here. I've been on the pause for coming up to 12 months. So sometimes things do have to shift. Although that could be the case, I think you would need to see more than just one rate cut here to collapse the market. So the theory that I've seen when it comes to interest rates is that people are waiting for these corrections to collapse the market. So they think once we see one, that's it. The Fed has pivoted and down comes the market. That has not been the case in history. It doesn't just take one cut to crash the market. I know everyone's going to have their own opinion on that, but I'm sharing with you what I've seen when it comes to the data itself. And I just want to continue to follow the data. So although we may get a cut, and I'm not suggesting that it has to be here, but although there might be one, I don't think that's going to be enough to cut the market. What I think would happen is that it would be enough to continue to push asset prices up because now money becomes cheaper again. That's what I'm seeing here, especially across real estate. So if that's the case, they might think that they've done the cut a little too soon and then potentially bring the cuts back. So bring the hikes back after the cut. Lots to get through until we get there, but I just wanted to update my theory when it comes to interest rates. In case there is a cut, I wouldn't just be jumping on the bandwagon of a major collapse after that cut. I think that's still pretty ridiculous and not on the cards yet until probably sometime around 2026. Still a couple of years away, and even then, stock markets could continue higher if real estate peaks out and begins to pause or decline. Okay, so on to the stock markets. Again, another all-time high daily close in history. I can't see these things coming down anytime soon in terms of a collapse. Corrections along the way are obviously welcomed to bring on a healthy move to the upside. And the last one we've seen was roughly around 3%. And prior to that, pretty much only got a daily reversal here of 1%. So again, daily highest close in history. After hours open again this morning is starting to push a little bit higher. There is a gap back here for the S&P 500 at 54.50 up to around 54.70. Maybe we see that filled, maybe we don't, but that's going to be on the radar there to see if there is some sort of fill. Other than that, you've got your support back at 5,300 and then the previous old all-time high all the way back here at 4,800. So the market has gone pretty far from the previous all-time high. It's up now about 14%. I wouldn't be betting against a rising bull market. We need to see a lot more change before we start to get too bearish and try to call every single top. The NASDAQ, same thing again, new all-time high price, new all-time high daily close. And here is the after hours market trying to push a little higher again. It's attempting to break through a major 50% move here. So that's the extension on the NASDAQ. And typically when that happens and it breaks through it convincingly, still need a couple of days. Let's see when the week closes here. So the end of week in 24 hours. That would essentially show that you're probably going to see more upside towards the next target, which is around the 100% level for this one here. So the 50% is at 19,400 and it's sliced through that. So I'd say we're on our way to 21,600 over the coming months here on the NASDAQ. Hopefully that's not too much hopium. I'm trying to deliver it in a conservative way, but really when you've got markets breaking into new all-time highs with a lot of strong stocks continuing to push to new all-time highs, you don't want to bet against that. I mean, yes, there are people that continue to short these markets, but I'm just following the trends and continuing to see how this is going to affect Bitcoin and cryptos once that more risk environment comes back. Now, of course, the stock markets are being led by Apple, new all-time high price the day before last, and then yesterday was a new all-time high close, even though it was a bit of an inside bar here. That's that red bar that you see there, lower highs but higher lows, but still the close was higher, as you can see there on the white line. Again, being led by more stocks. Amazon still trading at all-time high territory. You got Google put in a new all-time high the day before last, so on Wednesday. You've got Facebook also trading around those highs. You've got Microsoft at new all-time highs, pushing to new fresh highs. Nvidia, again, new all-time highs. Tesla trying to do its fair share, but really it's one of the weaker out of those top stocks. And if you do prefer a bit more of a degenerate move here, some people have asked for MicroStrategies, your Michael Saylor stock. I would be getting a little bit bearish on this stock if it went under $1,000. And of course, this could just be another wind up before we push higher past sort of $1,800 would be the key level there until you get to 2,000. So you want to see consolidation above these tops, which would be roughly around $1,800, and then 2,000 is the next breakout point. As for GameStop, this is a bit of a wild ride. Probably not my cup of tea, but if you do want to get degenerate, look for those prices above around 48 and closes. Otherwise, maybe the GameStop has stopped again to the dead side. That leads us to Bitcoin and the corrections that we've seen over the last 24 hours. There was the dump on Tuesday before we got that fake out the day after. And then, well, yesterday it's come back and corrected. So we're really still in this trading range for BTC. And that is not giving any sort of confidence to the cryptocurrency market. There's no lead here from Bitcoin. Therefore, cryptos continue to slump. And as I showed earlier in the intro, these were all red. And now it's just past 10 a.m. here, which is the close for the markets. Therefore, these numbers reset. And so you start to see a little bit of green. But essentially, the last 24 hours has been red. I think what needs to happen here is Bitcoin needs to show some sort of hand. It needs to lead the market again. And then you start to see that risk come back into cryptos. And we've got some specific levels that I want to get through on the total cryptocurrency market cap. But just to cover what's happening with Bitcoin at the moment, 67K. I mean, it's just been the same thing over and over again for everyone over the last 24 days. And the last call that I was talking about after March was being underneath the old all-time high for roughly 4 to 6 months. Now, I'm not trying to pump up my bubble here, but I haven't seen anyone else talk about the possibility of the market being underneath the old all-time high for that period back here. That was the first time I put it out, 17th of March. The reason being was that 3-day down signal. And so far that has held true. And the emphasis that I want to bring to that is if we see that again at another significant high, or maybe the all-time high, try to take profits whenever you see that complacency bounce. Now that could be a fake out and go a little higher. As some of you guys have suggested or commented on, with someone saying how much they should have just played Bitcoin and not worried about the altcoins. Thanks for that comment as well. You can see why it's just so important to remain level-headed, take those profits, even if the market does go a little higher. I know that goes against the whole crypto thing and people wanting to get degenerate and take big money out, but the sad reality, or I guess the reality is, the majority of people won't be able to do that. So why not just take some profits when you see significant signals after the end of significant greed in the market? That time was 80K Bitcoin, 100K Bitcoin. It's not going down because the narrative of the ETFs and the ETFs just won't sell. It's impossible. BlackRock won't let this happen. It's just really like novice mindset towards the market. Like, why wouldn't BlackRock sell, or why wouldn't the ETF sell? They're just regular people like you and I. If they get scared, they're going to sell out of the market. Typically what happens. So there is a signal there. 4 to 6 months takes us out to about July. So we're basically coming into that time frame now. We're less than a month away from that time frame. So we're getting well within that now. We're into that 4th month, or leading into that 4th month now. So that's the bit of wisdom I want to share with you guys today, and I'll continue to talk about that as the market rises. But it's just so much easier to talk about it now and discuss it now, because the greed hasn't got to our minds, and the comment sections always get really out of hand when we get into those big bubble territories. No one wants to hear it, and it's just blasphemy to even talk about it. You need to be on the side of the market and the whole hype up at that stage. So I wouldn't be concerned unless Bitcoin broke 64 to 65, in which case then I'd be looking to around 60 to 61,000 for a retest of this low. For now, things are all good. Let's move on to this signal here that came up last week, looking at the run on the weekly chart. So we were looking at the possibility of 5 straight weeks up and what happens after those 5 weeks, and then how long do we have to wait until we were to see higher prices. And so after this signal, the 5 weeks or more in a swing, so consecutively in a swing, I've gone through and had a look at the time frames until the market really got going again. This one here, you could look at 7 weeks to the low, and I might just take it out to 9 weeks so you can see that as well until the breakout. And yeah, if we take a look, you've got 7 weeks to the upside, we got the correction, and then 7 weeks into the low. And as I just showed here, that was also 7 weeks into a low with a fake out. There you go, a false break. And then it put the low in, and then you had to move to the upside. And the reason why I'm calling that a false break is that I would much rather be on this run than that run. Everyone has their own opinions where they want to be, but I want to be on this run, which is why I'm measuring it to this low and not this little low here at 4 weeks, because that really wasn't enough time to give the market time to consolidate before you had another big move. There just wasn't enough time for the buyers to get in, absorb the supply to then push that demand on. So that's the time frames that I'm looking at there. There's your 9 weeks until the significant breakout. Bitcoin is currently 1 week down from that high. So I'm going to look at a few options here, and we're just going to leave it open here from around 4 weeks until about 9 weeks. And 9 weeks takes us out to the end of July, which pretty much brings us out to that 4-month period underneath the old all-time high until you get the breakout. Now that's only just 2 times that we've seen that. Let's have a look at another couple here, see what timeframes we get. You got 6 weeks up. Again, false break, because I would much rather be on that move than that move. And then you see the market roll over. So there's the top after the 6 weeks in a row. Correction, move to the upside, 5 weeks there. Let's have a look at the previous cycles. Now, this is towards the end of the bull market, and I want to match like with like, and I've got 1, 2, 3, about 2.5 to 3 weeks here before the move to the upside, and I think we've got longer to go than this period here. That was essentially the last run into the peak, and I don't think that's the case where we've only got a matter of weeks left in the bull market. Taking a look back at late 2020, and you can see from that top there, we had 5 weeks up, correction, and then the breakout was 9 weeks from that top. To the lows, there's the higher low at 5 weeks, and there's the actual low at 3 weeks. So I'm looking to the breakout there about 9 weeks to the upside. So you want to be in somewhere around that sort of 5 to 7 weeks, and then roughly around that 9 weeks from that top. We've seen multiple breakouts here, 8 to 9 weeks. Let's take another look. This was early in the cycle, but there was a very big move happening, and that was in the middle of the cycle, middle of the move, 1 week down, move to the upside. And these are my areas that I do think we're most like, where we had a big move to the upside, and then the correction happened there. You had 7 weeks until it broke out again. To the low was about 4 weeks. So look at 4 weeks and 7 weeks. Again, here is your top, 5 weeks up, false break. And then you had 8 weeks until it broke out of these tops. To the low was about 4 weeks. So again, 4 to 8 weeks. 2 more occasions. This time it's around the old all-time high. So that was the move into 1200. There is your peak. There are your tops. And this is the move 15 weeks up. Correction, 1.5 weeks down. And then there's the top to the breakout, 7 weeks until you broke out. There is the top again at 8. And I would much rather be on this run than on that run. But anyway, let's have a look at it from the top of the 8th into the breakout. Again, 7 weeks, and to the low, about 2.5 weeks. So we're getting a pretty consistent read on how many weeks it typically takes until you start to see a breakout from those tops. And if it is anything like the majority of the past results, then maybe we're looking at somewhere around 7 weeks from the top, or let's call it 5 weeks, because we did see some earlier ones around 4 to 5 weeks, which takes us out to early July. 7 weeks takes us out to around the 22nd of July, week beginning 22nd, and then 9 weeks takes us out to early August until those particular breakouts. So just like in March, when I shared with you that trade signal of the 3 days down, the overhyped greed, and how it was likely we wouldn't see higher prices for a considerable period of time, or if we did, it would probably be a false break. So I was still looking at the possibility of a false break. This time round, I think we've got another few weeks to go, maybe several weeks, until we start to see that punch out to the upside. And we are starting to see a few more bears come in thinking that this is over. So it's kind of good to see that, because many are probably getting a little bit worried that the cycle is over and they just want to dump their cryptos, because their cryptos have been heading down. They're sort of lost around that sort of 30, 50, sometimes even getting close to 70% in some cases if you got on board the smaller caps. So next up is the total cryptocurrency market cap. And we want to get an understanding, or more so a feeling, of when those good vibes return, those feel it in the jelly moments where basically the normies are here and the masses are back on board, pumping up prices for a shorter period of time. So I want to give you those time frames and those particular signal areas to hopefully find out when this whole feeling is over. So it's over at this particular signal, and it's happened in the past. I think it should happen pretty similarly again, especially when we get that feeling of the jellies, and this current feeling is over. This feeling of deep, dark, depressing times of cryptos only going lower, and that it's not going to return. But before I do, links in the video description for our free TIA report that also has our new Ultimate Traders Accelerator. And now we've released this to our members, and if you do want to join that, this is the one to join here, TIA Premium. It includes everything from TIA membership, but also has all of the trading courses. So it has plenty to get through. It's all structured, so you can learn everything from start to finish about trading and investing, short-term, long-term, make it a part-time gig for yourself or full-time as well. There's the costs. I'll leave it up to you guys to decide what you want to do. But some of the reviews have been absolutely amazing, especially from Milko Gold here, just recently, 69 years old. He'd been trading for 20 years and he was still in the red. Now with you, I actually make profits. So I appreciate all the reviews and hopefully this is helping you decide what it is you want to do with trading and investing. Jump aboard with the TIA report and you'll get access to our free Discord where you can check out all of the reviews for yourself if you're still on the fence about what you want to do next with your crypto trading or long-term investing as well. Plenty to look at there, plus the results from our members. They're not just all profits. You get to see what everyone is up to here, their losses, what's going on, and why things are occurring for them in their portfolio. So lots of great gains there. So again, well done to all of the members. Let's have a look at this total cryptocurrency market cap and the level that we are now watching. So 700 billion has been one of the major levels that I've been covering on the channel. Reason being is that it's a major 50%. And you can see that the market had topped out at that level and corrected off a little mini double top here. So we've still got the lows in. I still see this as higher lows and a stealth type of move here on cryptos overall. To the downside, 550 billion would be the first invalidation, whereby the time would just take longer for any sort of recovery here for altcoins. The real dead zone for cryptocurrencies and no alt season, I'm looking at around 400 billion. That's where the market accumulated before the breakout of October, November. So if it got back under that level, things are over. That is a weak technical structure. You're not going to see it come back under and then skyrocket to new all-time highs. Here, not bad. Here, probably don't want it there, but it's not the end of the world. Under here, end of the world. 400 billion based on the total cryptocurrency market cap, excluding Bitcoin and ETH, but including stablecoins. That's the end of the world. Now, in terms of the feelings and the good vibes to the upside, last cycle, we had a breakout of the monthly swing tops. You can see they were confirmed after the correction. There is your monthly swing top, another test, double top, rejected into the cycle low. You can see the market start to come back with a few stealth moves here. Not many new investors are getting on board because of how small those bars are. You can see that from the price. But then the masses start to get here and those bars become larger. They start to really snowball into the markets, and that's what causes these big moves to the upside, big moves to the downside, and they bring the volatility with them essentially because they're new and the emotions are way too hot for them. And you can see it happen again, move to the upside, and then after that, show's over. Everyone continues to try and hold on and hope for the best, but eventually it wears on the psyche of the investor and they dump out. They're all done. So the feeling of the good vibes happened when it broke through those monthly swing tops. You can see it tested it and then all of a sudden it was gone. The earlier entries are through the stealth period, and I think we are in that stealth period now. So once we break out of those tops, somewhere around 800 billion, I would say that the good vibes and the feeling to the market is back and that we're in this bull market and everyone's going to get rich, at which point there's limited time left. There is less time left at that point compared to the entire time it took to get to that point. What does that look like exactly with numbers? Well, if we got in December and the breakout was somewhere around using July, August is what we're looking at with Bitcoin, come back here to August, well, there's about 600 days. So I would suspect that you would see less than 600 days into the peak from that point. So breaking out of that roughly 800 to 820 billion level might be some sort of experience like this. This was the fractal that we were using from 2020. So far, it's been almost dead on, and like it's happened almost exactly the same. You can see the moves to the upside, the corrections, and then the blasting move up. Now, this only goes out to the end of June. Maybe it comes through to July or August. So if it was July, there's your 120 days. August is going to be your 150, so 5 months, and then 180 days being your 6 months comes somewhere in September. So essentially, Q3. I'm looking at a Q3 significant breakout, not talking about a few little tests and a grind around at those prices. I'm talking about the feeling in the jellies. I want to get that feeling in the jellies again, because you can see that this attempted it through here in January 2021. It broke through those tops, but it really didn't get going until later in January, essentially February. So I want this good vibe jelly feeling. That's what I'm talking about, that when this whole stealth period is over. But in the meantime, while you're still seeing higher lows, make sure you're finding those stronger altcoins or rotating from the laggards into the leaders. And I've shown you many times on the channel how to do that. But if you do want to understand that more, best place to go is TIA Premium. Link to this in the top of the video description. Otherwise, I'll be back here with you guys at the next video. So until then, watch your strong, watch the weaks, rotate into the strong, and also watch that total cryptocurrency market cap for an attempted break at 700 billion, then an attempted break at 800 billion in this stealth mode. Like, subscribe. See you guys back at the next one. Take care and peace out.